Today, we got the widely anticipated debut of CoreWeave. It's a company that's built a next-generation cloud platform for the AI era that we're in. I covered this story Wednesday night, but in the last 2 days, been some developments, and not all positive. But ultimately, the demand for the IPO wasn't there at the original deal size. Didn't mean they didn't get the deal done, though. Yesterday, CoreWeave cut the offer size from 49 million shares to 37.5 million shares, lowered the deal price to $40 in order to get the deal done. They ultimately raised $1.5 billion rather than $2.5 billion. But hey, at least they got it done, especially after today's development of just another brutal tech-led sell-off. Shortly after 1 p.m., stock opened, trading at $39, below the offer price of $40. Did touch $37.50, but then bounced back, closed exactly at the offer price, $40. So is CoreWeave's tepid debut an opportunity for you? Which is a good reason why Wall Street lacked the enthusiasm at the higher price. How about we go straight to the source? We find out joining with Mike Intrator. He's the co-founder, chairman, and CEO of CoreWeave. Hey, Mike, thank you so much for coming on the show, and congratulations on the IPO.
Thank you so much. Today has been such an amazing day for us. I appreciate the opportunity to talk with you.
All right, so Mike, there are a lot of people joking around today. They were saying, did Intrator and those boys at CoreWeave cause the problem in the market, or was the market the reason why CoreWeave stock didn't shoot up higher? But you know what? Let's talk about the fact that 10 days ago, this market was hot, and then today, people think it's cold. The truth is, that's just not the way it is at all, is it?
No, listen, look, it was a really tough tape today. It's been a tough tape for the last, couple of weeks here. There's headwinds on the whole market, and there's definitely headwinds in the AI space. But look, stock comes out, it trades pretty tough, kind of ends up where we offered it. I feel like we did a good job. The banks did a good job kind of downsizing the offering and getting the price right so that we can come out into this market. And you hit it dead right. Like, for us, the key to this was getting into the public markets, offering our stock, and having the ability to be a public company, because that is transformative for our company.
Now, Mike, I'll tell you, one of the things that occurred to me all week, actually, was we're used to tech companies coming out with no debt. Why? Because the venture capitalists take stock. This did not come out that way, so a lot of the tech people said, my God, this has a lot of debt. In reality, the way you want to be able to do your business is to buy all the Nvidia GPUs you can do and get that first mover advantage. And if you didn't take any debt down, where would your company be?
Yeah, look, the debt is the engine. It's the fuel for this company, right? We go out, we find great contracts with great counterparties that need massive scale computing to drive their business. And then we go ahead and we go back to our syndicate of lenders, and they give us the debt to stand up the clusters that will deliver revenue to the company. It really is matched. Whenever you see debt on our balance sheet, you're going to see an offsetting revenue contract that is larger.
Right. Now, there were a lot of people today who were saying, well, wait a second, these things depreciate rather quickly. And didn't Jensen Huang himself say in his keynote that he sure hopes that nobody buys the Grace Blackwell when the Vera Rubin comes in? There was a lot of joking about that, and I think people didn't realize that it actually was said in jest. Because, in fact, the Grace Blackwells will be worth something even 2 years from now. True?
Yeah, absolutely. He made the joke that he was the chief revenue destroyer, and I almost fell out of my seat. But look, at the end of the day, there's the narrative that was out there that these things depreciate so fast and will be supplanted by the next generation. But in truth, what we see from the contracts that we are actually able to execute, like the just under $12 billion contract that we executed with OpenAI last week, they executed that contract for 5 years with 2 one-year extensions. So it is a clear articulation by people who are putting up the money, that are buying these contracts, that they believe that this infrastructure will have retain value far into the future. And those same buyers will come back. They will buy new infrastructure that is the most cutting edge for their next models, and then they'll take this earlier infrastructure and use it for other use cases in their company that requires really large bulk compute.
Excellent. Okay, so Mike, a week ago, people were saying, wow, Nvidia really likes these guys. It's terrific. They have position in it. And the narrative changed today. It was like, oh, my God, Nvidia's propping this thing up. I mean, they're way too close. They are way too close. So, again, something in between?
Yeah, look, people are going to put out whatever narrative they want. At the end of the day, Nvidia has been an incredible partner for us, and we have been an incredible partner for them. We build fantastic infrastructure. We bring it to the market in its most performant configuration. We're able to deliver it quickly. We have wonderful software that allows people to use it to be able to drive their models. They understand our business deeply. They understand the debt in our business deeply, and they believe that it is a fantastic way about going and scaling infrastructure for all of these new consumers as the world goes through this AI revolution.
I know I found myself defending your company. I went out to one of your really beautiful, I got to tell you, I mean, incredibly hot, yes, but in actual hot reality, data centers.
Yeah.
And one of the things that people are really caught up in is the idea that two people, Joe Tsai, and then Joe Tsai said something about maybe a bubble, and then Microsoft actually didn't play. It's not really clear what they did, but backed away from buying even more. Those two somehow made people feel like that this whole operation is completely overvalued, and the emperor has no clothes. Again, I wonder whether the zeitgeist of the stock market didn't interfere with the company whose product is so far in demand with a moat that no one else can deliver because they don't know how to do what you do, and that was totally obscured today and yesterday.
Yeah, look, you know, my theory here is that the market's going to take some time to kind of figure out exactly what we do and how we do it. But you know, the compute that we deliver, the software that we deliver it on, it is a driver for performance, and that's really what will ultimately bring clients back to us again and again. The data center, I mean, I'm so glad you got a chance to go there. It's just an amazing operation. You get to see this infrastructure. It's like walking into the Death Star. It's incredible.
Yeah, it is, and I think that people don't understand that a data center, the more Nvidia you have, the more you can do things that are wondrous and incredible. So perhaps you can explain what's the difference between a Pentium and a GPU.
Yeah. So look. First, on you know, folks, kind of different narratives out there around demand for compute. I have a very simple way of thinking about this. I have clients. They come to me. They need compute. They want us to build bigger. They want us to build faster. There is absolutely no hesitation. I can sell every single piece of computing power that I can stand up within the data center infrastructure that I have. So to the extent that there are other folks seeing you know, an air pocket in the data center space, that is not what my clients are telling me. It's not what their behavior is telling me. It's not what a $12 billion contract tells me. And so I'm pretty excited about that. As far as the difference between the clouds, the legacy clouds were built on CPUs, right? And when you want to drive artificial intelligence, you're really moving to a new computational intensive accelerator called a GPU, which is what Nvidia has done such an extraordinary job driving into the market. And that infrastructure is really what is allowing the world to build artificial intelligence.
Now, one thing, and I got this from being in a data center, I wish everyone would go to a data center. One thing people don't realize, they break. Things break. And when things break, and you have downtime, well, you might as well just say, this is costing me tens of millions of dollars. I have to get it fixed immediately. Now, there are some companies that fix it faster than others. And CoreWeave, I am told over and over again, fixes it faster than anybody.
Yeah, that's absolutely true. Like, look, at the end of the day, the way that we built our cloud, the way that the value proposition for our cloud is, we have built this data center specifically to stand up parallelized computing, the GPU computing that allows for artificial intelligence. And when you build it that way, you make 1,000 architectural decisions that optimize specifically for that, which allows for observability down into the physical infrastructure. It allows for predictive analytics so that you know when to cordon off infrastructure that's about to break. We really do a great job at this company addressing downtime, making sure that all of our clients have access to the compute for as much time as physically possible. And it is a tremendous focus for our teams across the physical side as well as the logical side.
All right, last question, just be a little bit philosophic here. It's entirely possible that, yes, AI and compute are all peaking, but wouldn't that be almost impossible given the fact that we still don't have autonomous cars on the interstate and nobody has a robot at home, and we've not been able to fix the warehouse issues yet? In other words, the infancy with which we find ourselves doesn't really jive with me with the end of the AI world as we know it.
Yeah, listen, I couldn't agree with you more. I think that, you know, people are really kind of thinking about this in a very short a short time span. And the truth is this is a process that will go on for decades, right? The world is automating. It is moving towards artificial intelligence. It will integrate into every aspect of our life. And the truth is, you know, we are going to be playing catch up with the computational power that's required to make that happen for years.
Well, I want to thank you for coming on. I know it's an emotional time. Your deal did get done. People who bought it at the low today made good money. People who bought on the deal are fine. And we must never forget that. Having brought a company public, I respect exactly what you accomplished. And I can't thank you enough for coming on a second time on CNBC. Michael Intrator, co-founder, chairman, CEO of CoreWeave, who also happens to be from New Jersey and not from Silicon Valley. Thank you, Michael, for coming on the show.
Thanks a lot. Appreciate it,
Absolutely. Mad Money's back into the break.
Coming up, has a consistent value trap transformed itself into a growth story? Cramer's plugging into what's moving AT&T higher. Next. Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.